It's a new week. Yeah, good morning, good afternoon, folks. Yeah, depending from where you're from. So this is a new week. We're looking into other blog, that is proportion blog, other blog. How you can identify an other blog when we are in a bullish trend, trading long for a buy side delivery or selling short for sell side delivery. So how you are going to anticipate price using other block, the help of other block. So you watch carefully and listen carefully, okay? So if we are going to, if price is delivering a buy side delivery like this movement here, this is a bullish trend. The whole price movement, this whole range is a bullish trend. That's a buy side delivery. While the opposite, which is the sell side delivery, is a bearish trend, then bullish trend, like buy side delivery, sell side delivery. So when we are in buy side delivery, that's we are bullish. We're going to be looking at every last close candle to act as an order block. Every last bearish close candle, the opening, you treat it as your order block. Every last close candle after a change, that's changing state of delivery, a breaker, change in state of delivery, up close candle, they are the bullish up close candle before you break above it and close. So the first order block is here, is an order block, last close candle, the opening of the bearish candle, you treat it as your order block after a break of structure. Then if you are bullish, you treat every last close candle as order block at the high, at the opening. This is the opening of the candle. Then here is the close. This weak, open, rally, then close down. That's a bearish candle. So you treat the opening as your order block, proportion block, to act as a major discount area. That's support level. You can call it demand zone. So you're going to treat it as your order block. That's how you identify an order block. Every last close candle. If you are bullish, here is the next last close candle. Low, higher low. You see, this last close candle here, the bearish candle is higher than this order block here. So you're going to treat them as order block, last close candle, higher low, last close candle, higher low. This and this is consolidation, electric consolidation there. Then manipulation, this is a distribution to take the buy side liquidity above there. So you treat every last close candle as order block when you have the narrative of where prices reaching out for. So every last close candle is going to act as an order block. This last close candle, higher low, last close candle, is equal lows. Then we have a higher low, higher low, higher low. The week can reach at fault at the main threshold, that's the 50% of the other block. Main threshold, use your Fibonacci, that's the 50% of this other block, main threshold, but the body is not going to trade below it. The wick can reach at the main threshold, higher low, higher low. Next other block, higher low. So you're looking at every last close candle of the bearish. This is an inefficiency, fair value gap, low, higher low, a fair value gap, institutional order flow, institutional order flow trade, institutional order flow trade enter. You can see a partial entry there because price is trading long. Another inefficiency, that's what push price high or low. Inefficiency, inefficiency. Then you get to see the other block that deliver inside the last close candles, this higher low. Institutional order flow trade, partial entry inside the fair value gap. Institutional order flow trade. You can see the movement, the rally there. Going to the daily sell CB, that is CB inefficiency and the consequent encroachment for the buy side delivery. Then for the sell side delivery, you can anticipate it the same last close candle, other block. This is a bullish last close candle, and here is a bearish last close candle. You can see the opening there. You have your rejection block, this rejection block, other block, last close candle of the bullish. This high, this higher high, lower high, the candle body, the candle body. The wick can reach out at the high there, it's normal. But you are looking at the candle body, like that's close candle body of the bullish to anticipate for the sell side delivery as other block. You are looking at the candle body, not the wick. This is the last close up candle there as an other block. The next other block is this candle here, other block. Then this candle, the high of it is higher than this high, lower high, making it a strong other block, strong other block, strong other block. And we have an inefficiency here too, where price delivered inside with a wick, that the body couldn't trade above it. We have a price had a rejection block, this is a rejection block. There is a major premium area, a major premium area inside the daily CB. This is a consequent encroachment for this buy side delivery. Then for the sell side delivery, you anticipate the same last close candle of the bullish to act as an other block, other block, other block. This is a breaker here. This is a breaker. This is a candle that leads to the breaker block there. Other block inside an inefficiency. Last close candle. Fair value gap is the other block there. Last close candle of the bullish. Last close candle of the bullish. To get the main threshold, the 50% of it, use your Fibonacci. The body, the wick, reach out forth at the main threshold, that's the 50% of the other block. So you are looking at the candle body here as an other block, drop, breaking low. Here now is an order block, and this candle is treated as a breaker block. Treat it as a breaker block. I see the price delivery inside the breaker block there. That's the 50% of the breaker where the wick they are delivered. The breaker block, the 50% of it, the body, the price reaction of the body there, and the wick, the rejection block. That's the rejection block. You see a small consolidation here. Then the last close candle, other block that took out the highs here. The highs there. That took out the highs, then we drop, break below, then sell off. That's the first set side delivery. First set side delivery, the Argo engineered price. Then coming to this level again, we add an inefficiency too. Then another breaker. Then you anticipate this inefficiency to act as a premium level after this break of structure here below. So we anticipate the same last close candle of the bullish, since you're still in set side delivery. This is the last close candle, higher low, taking at this previous high here. Then it becomes the higher high, which is the other block. Then the next bullish close candle is here. Here becomes the other block, the major other block. You see drop, then sell off. That's the Friday last week, Friday price delivery for Friday. Thank God it's Friday delivery. So today being Monday, you see the new week opening gap here. The new week opening gap between the high of Friday where price closed on Friday and the opening of Sunday midnight opening. That's the new week opening gap. You can see that gap there between Friday candle and Sunday opening. Look at the candle body, the time below my screen. Friday 4th April, then Sunday 6th April. So the gap between Friday and Sunday opening, you can see there's no candle wick or body inside this gap, inside this space here. Is an inefficiency, it's a void. That's a new week opening gap. That's how you can identify a new week opening gap, the gap between where we stop trading on Friday and where we open on Sunday midnight. That's the gap, new week opening gap. Now still on the trade here. So you leave it, let it, you have this 830 opening, first fair value gap there, 830. So we are going to treat our fair value gap, the first opening price. Yeah, other block, last close candle. So guys, they would like to see this fair value gap act as a support level, then to push price. Going to take this buy side, yeah, having a consolidation, the manipulation, anticipating for the distribution phase. So that's for today's lectures on order block, how to identify an order block. Okay, so you take your time and watch the video and study the price action there. If we are bullish, we are looking at every last bearish close candle, bearish close candle. And if you are bearish, like you are selling, price selling short, we are looking at every last bullish close candle to act as an order block. bullish close candle to act as order block, bullish close candle to act as order block for sell side delivery. Then for buy side delivery, you're looking at every last close candle of the bearish candle, last close candle of the bearish candle, you will see a kind of higher low, higher low, delivering inside an inefficiency fair value gap, institution order flow, partial entry inside the inefficiency. So thank you for watching and be safe.